Today, I'm going to walk you through what your 401k actually is, how it works, and ways you can use it. I'll also touch on the 401k version for military and government employees, the TSP plan. So, what is a 401k? It is an employer sponsored retirement savings plan. Think of it as a long term investment account with some powerful tax advantages. Every paycheck, you're automatically setting aside part of your income. Now, there are two options, either pre tax or post tax. Now, what does that mean? Pre-tax, the contributions are a one-for-one reduction of your taxable income. So to keep it simple, I put $1 in today. My taxable income is $1 lower today, but the funds are taxable upon their eventual withdrawal. So the growth of the funds is tax deferred. Post-tax are more often referred to as Roth contributions. This has no effect on your taxable income today. You do not get the $1 taxable income reduction. However, those funds do not grow tax deferred, they grow tax free because they've already been taxed. Meaning, in the future, if certain criteria is met, those funds can be withdrawn 100% tax free. So you might be asking, which one should I do? Now, that depends on your current marginal tax rate, your estimated future marginal tax rate upon withdrawing the funds, also might depend on your long term goals, legacy wishes, etc. Anyone giving you advice on this without knowing your specific situation should be ignored. It's not a one size fits all. What your neighbor does doesn't matter. A good financial advisor should be able to help you with this personalized decision. Now, the employer match. This is free money you don't want to miss. Match is one of the best returns you'll ever get. For example, if your employer matches 50% of your contributions up to 6% of your salary and you make $60,000, that's an extra $1,800 a year just for participating and contributing at least 6% on your end. This is a rare one size almost fits all recommendation. Max out your match. Contribute at least enough to capture the full match. Don't leave free money on the table. Your investment choices inside your 401k, you'll typically see a menu of investment options, things like target date funds, index funds, or actively managed funds. If you're not sure what to pick, a good starting point is understanding your risk tolerance and time horizon, how comfortable you are with market swings, and how long until you'll need the money. Target date funds automatically adjust from growth to safety as you approach retirement, which is helpful if you want a set it and forget it approach, although it wouldn't necessarily be my first choice. Especially important to consider things like liability matching as you get closer to needing funds in retirement. And fees, vesting, and portability. Look at the plan's fees. They're usually listed in the plan summary or investment fact sheets. Also look at the underlying investment expense ratio of the funds. There might be low-cost index funds. As you might know, that's my personal preference. There might be higher-cost actively managed funds. This is worth consideration as these funds will be invested for likely decades. Contributing, minimizing your expenses, and having the right amount of risk over a long time period is how people build their retirement wealth. Also, check your vesting schedule. That's how long you need to stay with the employer before the matched contributions fully belong to you. Your own contributions are always yours, but the employer match might take a few years to fully vest. This will depend again on your plan summary. This is something a financial advisor should be able to help you understand better. If you ever leave your job, you can usually roll your 401k into a new employer's plan or into an IRA. The key is to make it a direct rollover to avoid taxes or penalties. Whether this makes sense for you or not depends on your personal situation. And lastly, the TSP, Thrift Savings Plan for federal and military workers. If you work for the federal government or serve in the military, your version of a 401k is called the TSP, the Thrift Savings Plan. It works almost identically to a 401k. You can choose traditional or Roth contributions. You can get matching contributions for most federal employees under FERS and select from a menu of core funds. The TSP is actually one of the lowest cost retirement plans in the country. Money is a tool and tools are meant to be used intentionally. Keep learning, keep contributing, and build the retirement life that you deserve. If you found this helpful, subscribe for more educational content from Jonasson Retirement Solutions, where money is a tool, knowledge is freedom, and planning is power.